Byju's. It was one of the most valued startups in India but is still struggling. BharatPe incurred a loss of over 5.6 crore in FY22 but is still valued at $2.9 billion. Swiggy incurred a loss of over 3.6 crore rupees in FY22 but still valued at $5.5 billion. But why? How are these startups really valued? Hello and welcome, I am Pallavi Sharma and you are watching MoneyWise with ET Now. Valuing a startup with very little or no revenues and uncertain futures is a tricky job. There are many factors and methods to value these startups. First is discounted cash flow method. It is the most common method to value a business. The calculation is done by first forecasting expected cash flows, then selecting a discount rate based on the opportunity cost by alternative companies, and then you divide the discount rate with the expected cash flow to get the present value. A higher discount rate means a high risk that the company will inevitably fail to generate sustainable cash flows. So basically, it finds the present value of the expected future cash flows using a discount rate. The second one is market capitalization or market cap. It determines the company's worth through stock markets. To calculate this, you have to multiply the current share price with the number of shares outstanding. This indicates the size of the company, whether it's small cap, mid cap or large cap. So basically, if there is buying in the market and the price is up, then the growth potential is also good. It is the real-time estimate of the company's value. The market cap of a company is first established via an IPO. Say the IPO is valued at $100 million, then the initial market cap will be $100 million. Third is enterprise value or EV. It is an alternative to the market capitalization method. The measure of valuation here is by reducing the cash from the sum of debt and equity. Components of an EV are market cap, debt whether it's short term or long term, minor interest or equity value of a subsidiary with less than 50%, and cash equivalents. The formula is to add the total debt with market cap and subtract the cash and cash equivalents. This tells you the company's value and also the amount that the other company would require to purchase that company. Last is growing perpetuity. Perpetuity is a stream of cash flows that lasts forever. It is used to find the present value of cash flows of a company when it is discounted back at a certain rate. Say bonds. With them, you are entitled to receive interest payments forever if you are invested in them. To find the present value of perpetuity, the amount of regular cash flow is divided by the discounted rate. Growing perpetuity adjusts the amount of perpetual payment of each period by the inflation rate to ensure a constant level of buying over time. The present value of growing perpetuity is determined by dividing cash flow with the discount rate minus the growth rate. So these were the methods of valuing a business, but Byju's has raised a debate on value versus valuation. Many are now saying that value creation is a better measure for business growth. The needs of the buyers, suppliers and the team is considered in this along with the various other factors. The company's internal flow must be seamless and the working atmosphere and consumer experience should also be taken into account, because at the end of the day, the productivity and the consumer experience is what drives the growth. Some experts are saying and some entrepreneurs are also saying this. The main reasons why Byju's was not able to grow is because the consumers accused it of harassing them and the employees were not treated very well as per the viral videos that has gone on social media. Now this damaged the company's reputation as well. So value or valuation? Tell us in the comments.
If you like this video, then like, share and subscribe to ET Now.